This podcast is brought to you by Moneycontrol.
Hello and welcome to this special budget edition of Simply Save, the personal finance podcast at Moneycontrol, where we talk about all things money, investments and savings. On Saturday, the Finance Minister Nirmala Sitharaman lowered income tax rates for individual taxpayer. But she attached a condition. If you want lower tax rates, then you have to forgo most of your tax deductions and exemptions that you were taking earlier. So now from 3 income tax slabs, you will now go to 6 income tax slabs to take care of. The basic exemption for income up to 2.5 lakh and the 5% tax on income between 2.5 to 5 lakh remains the same. Now the new rates kick in. So 10% tax rate for taxable income between 5 and 7.5 lakh, 15% tax rate for income between 7.5 to 10 lakh. This was earlier 20%. Next, for taxable income between 10 to 12.5 lakh, the tax rate is 20%. And for taxable income between 12.5 to 15 lakh, the tax rate is 25%. Remember, this was earlier 30%. After 15 lakh, the old tax rates and the surcharges apply. But mind you, the rebate still continues. Now, in this podcast, we will help you decide if you want to stick to the existing regime or should you be switching over to the new regime. Remember, the existing tax rates and the tax slabs continue. I'm joined by my colleague and teammate Preeti Kulkarni. Hi Preeti, welcome to Simply Save.
Hi Kayezad.
So Preeti, now things have become a bit complicated now, right? I mean, the new tax regime was meant to simplify the process. Okay, and to an extent, it may have simplified the process because you don't have to file all your paperwork when claiming your deductions and exemptions and all. But, you have to now take care of 6 income tax slabs. Earlier, there were 3 income tax slabs. So the question everyone is asking is, should we switch to the new tax regime?
That's the thing, Kayezad. As we were discussing post-budget, it's become complicated actually. Every year, salaried individuals will now have to decide if they wish to go for the new regime or stick to the old one, the existing one, that is. Both existing and new slab rates will continue and you have to make that choice. And you have to make that choice at the beginning of the year.
Okay, so every year we have to sort of plan, every year we have to make that choice, isn't it?
That's right. So as I said, you have to decide at the beginning of the year itself which regime you want to switch to or stay back with. And everybody has to do their own math. You have to take a look at your income, the usual deductions and exemptions that you've been used to claiming all these years, and then calculate whether you lose or gain by sacrificing these deductions.
So there are quite many deductions like Section 80C, Section 80D, the health insurance, which was a very popular one. The NPS was a very popular one with many.
Correct.
So every year at the beginning.
And the standard deduction as well.
And the standard deduction. So every year at the beginning of the year, when you are sort of planning your finances, when you're planning your year ahead, you have to take into account what you want to do and then decide whether you're better off sticking with the old regime or would you actually like to sacrifice and forego your tax exemptions and deductions and go with the new regime, right?
New regime. That's correct.
And the professionals also do get a choice, but I think they get a choice like once.
Once in a lifetime. They have an option to switch back only once in a lifetime. Salary taxpayers, on the other hand, can switch to and fro between the two regimes all the time.
So, Preeti, now speaking about tax reductions and exemptions, there are many popular ones. We discussed about Section 80C. I mean, that's a hugely popular one, like, equity-linked saving schemes and your PPFs of the world and your EPFOs of the world, your NSCs also come over there. Now, I'm just wondering, if these deductions and exemptions go and somebody wants to switch to the new tax regime, then, would people still invest in these instruments or, if they get that cash in hand, would people invest on their own?
Well, that's the big question. And it's true that these tax deductions were a great incentive for someone to save along with the tax deductions. Now, many youngsters, even if they invest just to get the tax benefits, get into the habit of investing because they know that before the year end, they have to invest.
Yeah.
Now,
it's like a compulsory.
Yeah, it's compulsory, which was that inculcated the savings habit in them as well. Now, financial planning is going to be more critical than ever. And because there'll be no one around to nudge you to put your money away safely.
At least this was like an automatic nudge every year that, okay, even if I'm not doing my SIPs, even if I'm not putting in debt funds or whatever, this tax thing is coming up, tax season is coming up. So like November, December, January, we should put something or the other in some tax saving instruments and be done with.
Correct.
So at least that nudge was there to push the young and the millennial.
And most of these ATC tax saving instruments came with a lock-in period. So you could not liquidate it as in when you felt like. So that was of great help for your retirement planning or any other long-term goal for that matter.
Okay. But on the other hand, the young and the millennial, they don't have their income is not very high. Okay. So their tax rates anyways are very low. You live in a city like Bombay where you don't have the luxury. Many people don't have the luxury of buying a flat. So there's no question of a home loan. So there's no question of home loan deduction, availing of a home loan deduction. Okay. His salary is very low. So they need a sizable disposable income in the hand. So they're not even putting in SIPs regularly or ELSS funds regularly. So for them, do the new tax rates make sense till the time that they reach a point where their income is fit enough to be, like, as we put it, taxable?
If they are living in a different city and they are paying a huge amount of rent, then they can still claim HRA, and for all you know, the existing tax regime might work out in favor of them, even in that case, even if they don't have a home loan and there is no interest outgo. However, for many such young employees, it could still make sense. So if you've not already committed to ATC investments, then it could still make sense for you because they have a higher cost of living, so their rate of savings is low. But it's also important to understand that this group of people is also very averse to savings. And now we both know that. And the good habit of investment, which should be inculcated at this young age, that may not happen under the new regime if there are no forced savings. Also, your salary increases over the years. Now, what's the guarantee that youngsters who don't save now will opt for the new tax regime will save later?
Yeah, so
and
once
savings
you get
are important because we don't have a social security mechanism in place. So ultimately, you have to save for your retirement. The government is not going to help.
And it's like, as you said, that, it's inculcating the right habit. Even at that level, even if your salary is beneficial for you to go for the new tax rates, but at least, if you start investing early on in Section 80C instruments, investments or something like that, then at least when your salary increases, when you actually need to decide between the two regimes, it's easier for you to choose because you're already on that savings part. But yeah, financial planning is going to be more important. Many financial planners on social media and everywhere have been quite stunned by these new tax rates and the kind of sacrifices that it warrants. That, you take low tax rates, but you forgo your investments, because as you said, retirement planning is also very important, and for which you need to start at a very, very low age, irrespective of whether you fall in the taxable bracket or not taxable, so long as you're getting a fixed salary every month. Only positive side, Preeti, I can see over here is that, there are many insurance companies who used to pitch products based on just the tax saving angle. At least, hopefully, some of that aggressive marketing sales pitches would now go down.
That's correct. The incentive to push these insurance products, low-yielding endowment policies, for instance, as products that offer triple benefits of tax saving, investment, and free insurance, that will go down. And as we know that these are low-yielding products, and younger individuals especially can do much better with equity investments.
Correct. And as your salary also goes up, and for higher income people, if they're taking more deductions, the new regime would still, at least for them, the old regime would be a little better, right? We did the numbers the other day, and 15 lakh example. This is the example that the finance minister actually said in the budget. And she said it in a way that, the new regime actually works better than the old regime. But if you remember, she took only the Section 80C deduction. So I think if we just take the Section 80C benefit, then yes, maybe the new regime works better. But let's be honest, it's not just a Section 80C benefit that many people, especially in the higher tax bracket, would take, right? They would take home loan deductions, NPS, and this and that and whatnot. So let's say if you take even a 2 lakh deduction on the home loan interest beside the standard deduction and the Section 80C. I think our numbers showed that the old regime, you would save more. You'd save more, definitely, than the new regime.
So in simple words, higher the number of deductions and exemption that you claim, you will be better off if you stick to the old regime. The better it is for you to stick to the old regime.
And the old regime and the new regime will coexist.
They will coexist.
They will coexist. So it's not like the old tax rates or tax slabs are gone. It's just that the new tax slabs and the tax rates have come, and you have to just then decide.
Make the
so
choice.
Speaking of making a choice, Preeti, every year, as salaried employees, at least they have to submit the tax proofs to the company. Now, how is it that you foresee this process to come along? Because normally in January the companies open their portals, online portals, saying that this is please give us your tax details so that we know how much tax to
finally deduct.
But suppose if you're going for the new regime, then the question of giving your tax documents does not arise. So how will the process start, like very early in the year? And plus you have to remember, you have to pay your advance taxes also.
And all employers ask you to submit your proposed investment declaration
at the beginning
of the financial year in April. So that is when you have to estimate the ETC investments that you're going to make or any other deduction that you're going to claim, and they'll estimate your tax outgo accordingly and deduct taxes through the year. Now, because this process begins in April, this year you would be better off. It would be wise for you to start right away and decide now whether you want to switch to the new regime or stick to the old one, because these are still early days, and even corporates are in the process of figuring out how they will approach the process of seeking proposed investment declarations from their employees. But it does look like they'll offer both options to employees.
But you have to they will possibly you to tell you to sort of freeze the option in the beginning of the year. So that, it's not like, I opt for opting out of the tax reductions and benefits and go for the new slab rates, and then when come December 2020 or January 2020, I again change my mind and tell them that no, I want to switch back to the old regime. And in that case, they'll have to recompute everything. Because they would have deducted the TDS also throughout the year that accordingly, right?
Right. So a lot of work would have gone into it. So I'm not sure if employers will allow you to switch to the new regime in December or Jan when you have to submit your final investment proofs. In April, you don't have to, as we know. Now it really remains to be seen whether they'll be allowed to change their choice in January or February. But we'll really have to figure out. Employers are also taking their time to figure out whether or not how to go about this entire process. So what it means is that it's been a complicated budget, not only for people like you and me, regular employees, but also big corporates will have to figure out and rejig their HR process. Correct.
Everything. Great, Preeti. Thanks so much for joining us on this podcast. And as we said that it's an evolving scenario, so we'll definitely keep coming to our listeners more and more about how the new tax regime and the old tax regime will evolve over a period of time. Well, that's all we have for today for you folks. If you have any queries on taxation as well as budget 2020, do not hesitate to write in to us at mcpodcast@nw18.com. I repeat, it's mcpodcast@nw18.com. For more news, views and updates, stay logged on to moneycontrol.com.